We will have on the agenda today is House Bill 498. Representative Pollock. If you and your guests would come to the table, identify yourselves for the record, and then you may proceed with your testimony.
Thank you, Mr. Chair. Michael Sarge Pollock, District 51, State Representative.
And good morning. I'm Sharon Clark, the Commissioner of the Department of Insurance.
Please proceed.
Thank you, Mr. Chair. Members of this distinguished committee, House Bill 498 is needed so the Department of Insurance can continue to maintain its accreditation with the National Association of Insurance Commissioners. Failure to maintain accreditation will increase the regulatory burden on our domestic insurers.
Got a motion from Representative Stevenson, a second, Representative McPherson. Any questions from members of the committee? Seeing none, Madam Secretary, please call the roll.
Representative All.
Aye.
Representative Bentley. Yes. Representative Bray. Yes. Representative Duval.
Yes.
Representative Frazier Gordon. Yes. Representative Gooch.
Yes.
Representative Justice. Representative Lewis.
Yes.
Representative Lockett.
Yes.
Representative McPherson.
Yes.
Representative Pollock.
Yes.
Representative Rorix.
Yes.
Representative Roberts. Representative Rudy. Representative Smith. Representative Stevenson. Chairman Meredith.
Yes. We don't have a consent calendar. House Bill 498 does pass with favorable expression. Same should on the House floor. Thank you, Representative Pollock. Thank you, Commissioner.
Thank you.
Thank you.
I do need to make a couple of introductions as we get started today. As you have heard, we do have a new member of the committee with us. New to the committee, not new to anybody in this room, although he's getting used to new rules, I think, based on his consent calendar comment. We're happy to have Floor Leader Stephen Rudy as a new member of the House Banking and Insurance Committee. Don't challenge the ruling of the chair, lady. And then I also want to turn it over to Representative Bray to introduce his special guest that he has today.
So with me today is my 6-year-old Valentine, all the way from back home, Isla Bray.
Isla, happy to have you here. And even better to have you here, you can hopefully keep Daddy out of trouble today. Good. Next bill we'll have before the committee is House Bill 495, Representative Dixon. If you and your guest would come to the table, introduce yourselves for the record, and then you may proceed.
Thank you, Mr. Chairman. My name is Jonathan Dixon, Henderson, District 11. It's a pleasure to be before this honorable committee today. I will let my guest introduce themselves and then proceed with their testimony.
Mr. Chairman, members of the committee, my name is Dustin Miller, retained legislative agent for Veritech, the payday lending database provider for the state.
Mr. Chairman, members of the committee, my name is Mark Tuna Wilson. Since Sarge used his nickname, I guess I could do that. I'm with Top Shelf Lobby and here at the table today for our client, Community Choice Financial. Thank you for allowing me to be here.
Please proceed, Representative Dixon.
Thank you, sir. Now I'll turn it over to Mark Wilson with Top Shelf and let him explain his testimony and part of the bill.
Absolutely. This is kind of a joint project, Mr. Chairman, between myself and my colleague, Dustin Miller, to kind of do some cleanup to some issues that we've had. Our client is a payday lender, and we have been very supportive of Mr. Miller's client for years on perpetuating a real-time database, which Veritech manages for the Department of Financial Institutions. We were very supportive of that from the get-go for consumer protection reasons. Our portion of this bill, of House Bill 495, thank you to Representative Dixon for carrying it, simply brings the financial services that we offer through these small consumer loans into the 21st century, if you will, by allowing electronic financial ACH transfers for consumers who use the product to be able to, if they are residents of the Commonwealth of Kentucky and the lender is a bricks and mortar presence in Kentucky, they may actually originate and pay off their payday loan electronically if this bill becomes law. And it's simply a
Second.
I do have a motion from Representative Lewis and a second from Representative Lockett. We do have somebody that has signed up to speak. I think that fairly well covers your portion of the bill, Mark.
Just
Dustin, if you want to explain your client's portion of the bill briefly, and then we'll bring the folks that want to speak on the bill forward after that.
Yes, sir, Mr. Chairman. So in 2009, when the database was put into place, the legislature put in place to fund that database $1 per transaction fee. So over the last 15 years, for the first time, the cost of the database is going to exceed that. And so to keep the DFI from having to go to the general fund to get the dollars, this allows them to have a sliding scale of the fee not to exceed $3, but that the DFI would set to only cover the cost of the database. So that's my portion of it.
All right. And Richard, if you would come forward, you have signed up to testify. Introduce yourself for the record, who you're with, and then proceed with your testimony.
Thank you, Mr. Chairman. My name is Rich Seckle. I'm Director of Kentucky Equal Justice Center. We're a nonprofit civil legal aid organization. I've been watching payday loan policy for some time, even before payday loans were authorized by statute in Kentucky. That goes back to when bankruptcy trustees sued because the effective high interest rate on the loans was crowding out other creditors. Two elements of House Bill 495 concern us. One is the language which would allow online payday loans without visiting the store. The second is the increase in the database fee from $1 to $3. We're concerned that an online option would increase the volume of payday loans, that some portion of new users would find themselves in a debt trap, a cycle of repeat loans. The database fee increase needs justification, but it's likely the smaller of the two costs or effects of the bill. I'm not sure if people are familiar with payday loans. They got the name because the consumer would write a check to the lender for money they didn't have, but they expected they would have when payday came. The lender would give them the money and hold on to the check for a short period of time before they deposited it to get their money back plus the fees, hence the term deferred deposit. Over time, Kentucky set some guardrails on this. By statute, we allow two loans totaling $500 at a time. We permit a fee of $15 per hundred or $75 on that $500. The payday loan database operationalizes those limits, and we now charge the consumer $1, as Dustin said, to check the database up front. Picture the ad that says, download our app. It may make the first loan easier to get than going to the local brick and mortar store, which actually isn't that hard to find. But what's really troubling to us is the image of pressing that button for the next one and the next one. Remember, that's $15 per hundred, it's $75 for 500, and that's just the first time. Repeat loans are the rule, not the exception. Nationally, 75% of fees are generated by people stuck in more than 10 loans a year. In Kentucky in 22, the fees totaled over $58 million. So we don't want to see more people caught in that cycle. The trend has been nationwide toward greater protection from the cost of these loans. Probably the marquee event there was in 2006 when Congress enacted a 36% interest rate cost cap on payday loans for military personnel. The military had found that the loans were destabilizing essentially to military families. In the last couple of years, state legislatures in Illinois, New Mexico, and Minnesota passed interest rate caps. So the trend it may be going in the opposite direction. Our statute requires our database contractor to report data. In Kentucky, it's Veritech. I had their 2018 report. I've requested the more recent ones. 2018 addresses questions like, how many transactions did borrowers average per year? The answer, borrowers conducted an average of 10 transactions. The average loan term was 20.9 days, so you're paying $75 to have $500 for a pretty short period of time. I do want to acknowledge that nationally, even as the proportion of online loans is going up, the number of loans has been trending down with a spike in some states after the pandemic. I'd love to see you hold off on this bill, get hold of the latest Veritech reports and have a chance to ask them questions. I think you'd get a sense of the impact of the loans. They would clearly illustrate that repeat loan phenomenon and the cost it generates. It probably would demonstrate the value of having the database. In any case, in my view, it's too soon to say there's an app for that.
Thank you, Mr. Seckel. I think we do have some questions from members of the committee. If the bill sponsor and others would come back forward. You got a question for him? Richard, stay close too. Your questions for the panel, Chad. Okay. Pull a chair up, Richard.
Come on in.
Representative All was the first one who asked for a question, so we'll go to you first.
Well, thank you, Mr. Chairman. So around this bill, my understanding, at least what I've been told and what I've read, that a lot of these types of loans are already happening online. They're just unregulated. And so part of this bill is to regulate an industry, regardless of your feelings about that industry, to come into regulation with the statutes we have on the books here in Kentucky and the same kind of regulation we have for the brick and mortars locations. Is that both of your all's interpretations and intent of the bill, your perspective? And I'd like to hear both parties' perspectives on that.
We believe, Representative, thank you for the question. We believe that this bill will not expand anything other than protections on consumers in Kentucky because there's already a database in place. It's real time. Consumers can only take out 2 loans up to $500 total. That's not changing. Nothing else is changing other than the fact that people can pay back their loan electronically now like everybody else does in every other financial services product in the country. So, did I answer your question?
But you would say these loans are already happening online, they're just unregulated.
Oh, yeah, if there's a need, and I think the pandemic showed that to our consumers of the payday industry, is that, you couldn't go into a store during the pandemic. Places were shut down, so how could you present your paper check up until that point? So people started looking for alternatives, specifically in Kentucky, because it was written from the department from years ago, you had to have a paper check. And as you showed me yesterday, you still have checkbooks. I don't even know where mine is, but I pay, even my church tithe, I pay electronically now through ACH. So that's all this is doing. And these people that had that need and wanted to use this product were going to unregulated offshore companies that were not regulated in the Commonwealth of Kentucky, and who knows what their interest rates are or what kind of regulation there is, because they're not regulated in Kentucky. That's all this does.
Would I rather have people get a regulated loan and have the database checked? Yes. Do I want to see an increase in the volume of the loans? No. And I think it gets easier when you can.
But is it your interpretation that your organizations or your personally that those types of loans are already occurring on the internet and they're just not falling into our regulation
I don't have direct experience of it, but talking with Dustin, he pointed out that there are tribal entities that aren't subject to state rules, and some people may be finding them and getting disadvantageous loans. If they get a loan here in Kentucky under the rules, we think it's still disadvantageous.
Thank you. Thank you, Mr. Chairman.
And if I could editorialize for just a moment on that, I think what I have seen is there are fintechs out there and there are a lot of online lenders that, because they have no presence, no fiscal presence in Kentucky, are able to be unregulated. Folks in Kentucky can take out those loans, and I would venture a guess that many of those loans are actually a higher interest rate than the regulated loans that we have in-state regulated here. And so I think what this does is it conforms an industry that we already regulate to be able to compete in the space in the 21st century with companies that are not regulated that are already doing that.
May I ask what it is about the bill that would steer the customer to the regulated Kentucky version?
Well, right now they don't have the opportunity to do that. And so you literally have to go in the brick and mortar store location to institute the loan, whereas right now they can go online and get from an unregulated, but they can't go online and get from a regulated. Nothing steers them there, but they don't even have the opportunity to do that currently. Representative McPherson.
Yeah, I think we've shown that lobbyists probably make a lot more money, and they can just take their money in and out. We have to write checks to make sure ours is. No, seriously, any time that you've got anything tied to some kind of sliding scale, what's it tied to? Is there something you're just covering your payment, or is it tied to something that we'll know what that fee might be, and it just can't escalate up to $3 automatically?
Yeah, the $3 is the floor, Representative, but it will be the DFI's choice. So when initially presented to them, we were just going to change the $1 to $3 very simply, and then out of the funds that would be generated, the DFI would pay for the service. They didn't want that because they knew that would be too high and it would generate excess fees. Mm-hmm. And so what they asked for was to have that ability to set it themselves to what the cost was so that they weren't generating excess fees on the backs of borrowers. And we were comfortable with that. We just wanted to match up to what the cost is. So it's not set to doesn't move automatically. It's got to be by order.
So is it just covering the fee kind of in other words, if the cost goes up from one year to the other, they'll slide that fee. Like if it starts at $1.50 or $2, and then they see that it's covering the fee, they'll leave it alone. If it doesn't, they'll have the ability to move it back and forth.
Yes, sir.
Okay, thank you.
Representative Smith.
Thank you, Mr. Chairman. So actually, you're just here on consumer protection. Is that right? Did I get your briefing?
Legal aid organization. We're a legal aid organization, and over the years, the legal aid offices have seen lots of people who are trapped in debt of various kinds. And
so really the only concern that you have is the cost of getting the money. Did I hear your testimony right of a certain percentage? But you're not saying they're breaking the law. No. You're saying that you don't like the ceiling of being able to get up to a certain percentage?
Where it gets difficult for the consumer is when they take out repeat loans, one loan after another. And if you pile those fees on top of one another, it amounts effectively to a high
You'll understand this statement then. You know that there's a lot of constituents of mine can't go to a bank.
Can't go where?
Can't go to a bank. They're not eligible for the loan, or first of all, a bank can't make a $500 loan and be able to run as an institution. So we know that. We can say we agree on that. So we can agree that the consumers that use this understand what they're doing when they're doing it. So it's like me making a bet on a horse. I know I made that bet no matter how it comes out. If I go in and I need the money to get to the next Friday, I've got access. So, I mean, it wouldn't be successful if there wasn't usage. And so it's meeting somebody's needs. So would you advocate that there is people out there that need this too?
There's people that need money short term. Whether this product gets it to them in a way that's advantageous to them over the long term? I'd say the answer.
Well,
is
I think the principle of it is a business structure. So the business structure says that they have to do this to make that certain type of loan. I'm just wanting to make sure that you're not advocating to do away with a business that provides for our constituents. It's up to them whether they use it or not. If nobody was using it, we wouldn't be sitting here discussing this bill. So we do have a lot of people that participate. And I want to advocate for the both sides of it, that we don't want to take advantage of people, but also we want to have access for my constituents that utilize this. And really, I think it's an advantage for them to be able to do that and pay their bill. I'd rather have their bills paid for them not to pay their bills. So I guess I'm just trying to make sure I'm clear. You're not just in here trying to say the business is not right, the model's not right. You're just concerned about somebody getting themselves in a situation that that could put them in a bind. But that's their choice. So is what I'm saying. Am I correct or am I wrong?
Well, we would say we would like to see stronger regulation on these loans.
Mm-hmm.
You know, for military customers, Congress enacted a 36% rate cap. We have advocated for that in the past.
Well, I'd like for you to advocate for my interest on my credit card to go down too, but I'm saying that there's a reason there's a fee. There's a reason there's a business model that's set up, and I'm just saying I want to make sure that we don't leave the committees thinking that we're against people that utilize this business to pay their bills or to make sure they make it in 7 days or 14 or 21 days. We know that you already testified it's not a long-term commitment anyway. It's a short-term commitment. And so anyway, I want to make sure you and I are on the same page. You're not advocating that we don't need this for some constituents.
Well, I appreciate the chance to advocate for stronger protections. We would favor the 36%
I think that's what they're
rate
trying to
cap.
do, is they're trying to get out of the dark side of it and bring it to light to have it stronger for advocacy. So thank you, Mr. Chairman.
Representative Bentley.
Thank you, Mr. Chairman. Did I hear you correctly when you said it was 15% on $1,000?
It's $15 per 100.
That's
that you
15%.
You can borrow up to 500 at a time. So it would be $7,500 on that $500. And these are short-term loans, so you're paying $75 to have that for a couple of weeks.
I just want to clarify that. That's 15%. Anyway, you go at it. With the United States having $1.2 trillion debt in credit cards, and you guys being the experts on finances, tell me how this bill will affect that.
How will this particular House Bill 495 affect credit card interest rates? I don't think it has any effect on it, Dr. Bentley. I think it's this is specific and unique to this product that is offered legally in Kentucky now. $15, as you said, paid back for every $100 borrowed, up to $500. So I don't think it has any effect on credit cards, Dustin. I don't think. And
I'm not talking about the rate. I'm talking about the individual.
Oh,
out
the
here in
interest
rural
rates.
Kentucky.
Yeah, and I don't think we're actually debating the product of the payday loans as much as we are the consumer protections on them. So I wouldn't be able to answer that question, but I do appreciate it, certainly.
Do you have an answer?
On how it affects credit card debt?
Know how it affects the individual in Kentucky that's using these loans. We know that the credit card is $1.2 trillion in this country right now, this day. But how is this going to help our rural, or I'm in rural Kentucky, how's it going to help me?
Well, I'm glad we're getting into this discussion. I reached out to the Center for Responsible Lending yesterday, and they sent me back some observations about how payday loans affect people. And they say the long-term consequences are severe. Payday loans increase the likelihood that people will experience bank penalty fees. I'm reading from my notes. Bankruptcy, bank account closures. It's a hole that keeps getting bigger for people. So if anybody can get in and out with one loan, they're lucky, because most people are in for multiple loans a year.
Thank you, Mr. Chairman.
Thank you, Representative. We do have a motion and a second on the bill. Any other questions at this time? Seeing none, Madam Secretary, please call the roll.
Representative All.
Can I explain my vote real quick?
Cast your vote and explain.
Yes, I'm going to vote yes on the bill. I'm voting yes on the bill today, regardless of the product. I share many of your concerns. I'm not a fan of the product. I think to the gentleman from Green Up's comments about the percentage of $15 on a $100 loan, the APR on that is nearly 400% a year. So it's not 15% because you have to extrapolate that over an annual basis. So I just want that on the record, number one. Number two, I would love to further regulate the industry and cap the percentage like other states have done. But that's not what we're talking about, particularly with this bill today. And I do think that we have to do what we can get past, and having some regulation in place, enforcing the online industry to conform to KRS and other statutes, I think is the right thing to do. So despite my feelings for the product in that industry, I'm voting yes on the bill.
Representative Bentley. Yes. Representative Bray. Yes. Representative Duval.
Yes.
Representative Frazier Gordon. Yes. Representative Gooch. Yes. Representative Justice. Representative Lewis.
Yes.
Representative Lockett.
Yes.
Representative McPherson.
Yes.
Representative Pollock.
Yes.
Representative Rorix.
Yes, I'd like to just briefly explain my vote. Voting yes, again, for the increased regulation of the online industry and the modernization of the business model, but it does not reflect my overall opinion of the business model itself. Thank you.
Representative Roberts. Representative Rudy.
I vote aye, and I don't want to explain my vote.
Representative Smith. Yes. Representative Stevenson. Chairman Meredith.
Yes. Representative Rudy, nobody said you had permission to explain your vote anyway. House Bill 495 does pass with favorable expression. Same shit on the House floor. Thank you all for being here and your testimony.
Yep. Thank you, Mr. Chairman. Thank you, committee members.
Thank you, Chair.
At this time, I am going to turn the chair over to Representative Lockett, my co-chair, and he will handle the committee for the next two bills.
Thank you, Mr. Chairman. We are going to hear House Bill 488 is next on the agenda. Mr. Chairman, please introduce yourself and your guests, and please proceed.
Thank you, Mr. Chairman, members of the committee, Representative Michael Meredith, representing the 19th House District, Edmonson County and Warren County. I'll let my guest introduce himself as well.
I am Richard Nielsen. I'm a practicing attorney in Louisville, and I represent mortgage creditors, generally speaking, but here today on behalf of the Kentucky Land Title Association.
So House Bill 488 is a relatively simple bill that just expands and clarifies issues relating to mortgage modifications in the Commonwealth. There are a few counties in the state where it is difficult to record a mortgage modification, and it clarifies that they are documents that need to be recorded in those offices and beyond just being a correction to a mortgage. The clerks generally are always recording any of those that are just corrections to mortgages. And in many counties, you can already record mortgage modifications that extend length of time and things of that nature. But this just clarifies that they can be handled that way. And it prioritizes making sure that we keep lien priority the way it should be, which is first liens have priority. And if a mortgage modification extends anything.
We do have a motion and a second on the bill. I have a motion by Representative Bray and a second by everybody else, I think. Representative Pollock. Are there any questions? Would you like to continue with your testimony, Chair?
I'll save anything else for the floor, Mr. Chairman.
Good. Seeing none, Madam, please call the roll.
Representative All?
Aye.
Representative Bentley? Yes. Representative Bray?
Yes.
Representative Duval?
Yes.
Representative Frazier Gordon? Yes. Representative Gooch? Yes. Representative Justice? Representative Lewis?
Yes.
Representative Lockett?
Yes.
Representative McPherson?
Yes.
Representative Pollock?
Yes.
Representative Rorix?
Yes.
Representative Roberts?
Yes, and if I may register my attendance and yes votes on 498 and 495, please.
Representative Rudy? Representative Smith? Representative Stevenson? Chairman Meredith?
Yes.
House Bill 488 passes with 16 yes votes, 0 no votes. Same shit on the House floor. Our next bill up is House Bill 186. Again, Mr. Chairman, please introduce yourself and your guests, and you may proceed.
Again, Michael Meredith, representing the 19th House District, Edmonson County and Warren County.
Sharon Clark, Commissioner, Department of Insurance.
There's a sub on the bill. Would you like to address that first?
Yes, and I'm going to address that a little differently than I normally would, or I normally ask members of the committee to do. Normally we ask to explain the sub before we adopt it. However, the sub is essentially the entire bill in this situation. We started with a very simple couple of paragraph bill, and in continuing to work with the Department of Insurance and all the interested stakeholders, we developed a much more detailed bill that is what the sub is. And so if you all are willing to adopt the sub, I am going to explain it in detail.
We have a motion on the sub by Representative Frazier Gordon, a second by Representative Bray. All of those in favor of the sub say aye. Aye. Any opposed? Sub is adopted. You may proceed. So
cost defrayal is something that I'm sure some of you all have heard of, but many of us don't know a lot about. It was something that really came to my attention last year when I became the chair of the committee. It was something I was not aware of prior to that. Staff and I have been discussing it over the last year and a half now, almost at this point, with regard to that. So when the Affordable Care Act was passed at the federal level, it mandated that states create qualified benefit plans, health plans, with specific benefits that were put into effect when those plans were created. Anytime that we have a health mandate that comes through the process here since then, it has the potential to trigger a defrayal of cost, which what happens is if those are identified as defrayals, those mandates are, then the state has to pay for the increased mandated benefit. We actually already have two that we are tracking currently, bills that were passed last year. It had been an issue that had been discussed for some long time, but really nobody was actively tracking or starting to pay on defrayals until the last couple of years. And so those are the first two that have been identified for cost tracking and that. And so that's why we need to get this in law now and to deal with this issue, because it's going to have an ongoing and recurring cost in our budget and our budgeting process. And we need a mechanism to deal with the ones that are already out there, because effectively the health insurers are going to send a bill over to the Department of Insurance, and the commissioner and her staff are going to have to calculate an average statewide cost under the legislation that we have before us, and we'll have to make a payment to the insurers, and then they will have to, under the provisions of this bill, either decrease premiums on those plans or refund premiums on those plans based on what we do. The bill does update the current fiscal impact statement process for health insurance mandates to modernize them a little bit, and it does create a new federal cost defrayal impact statement to be completed by the Department of Insurance. So we know as bills go forward in the legislative process, will these mandates trigger defrayment?
We have a motion on the bill and a second. Are there any questions? Question by Representative Roberts.
Thank you, and thanks for bringing this bill. I do have one question. It's a great bill. I just want, for my own internal math, I'd like to understand something a little better. For instance, last cycle, I believe we passed the biomarkers bill, and I think that's one of the ones that's going to fall under this. The biomarkers bill is a great bill, and I think in the long run will save insurers money because of the way it's able to help us identify and modify treatments. So if I heard you correctly, then once those calculations are made, if indeed there was a savings, then premiums would be adjusted so that those savings would eventually trickle down to Kentuckians, even though we would, as a state, be covering the increased costs. Is that correct?
I'm going to let you answer.
Yes, that's in essence correct. And, we do not disagree that in the long run that we think that will have an impact. But that is on down the road, Representative Roberts. So there are two bills. They were the House Bill 170, which was the coverage for the infertility during cancer treatment, and the biomarkers. And those are the two that triggered. The biomarkers went into effect on January 1st, 2024. So those claims are being incurred this year. In addition, next year, the cancer treatment bill will go into effect. So on an ongoing basis now, the state will be responsible for the usage of the, how many insureds use that, those mandates of those two bills. So it has been around. We've had health mandates for a long time, and you all are very familiar. The department has been doing those with regular, for many years. There are currently 11 states that are paying into the cost of frail, and the biomarker bill has triggered it in like 4 or 5 new states. So it's, the department will certainly do whatever you all want us to do, but we just we have the responsibility to tell you that there can be an ongoing cost and what that is. Now, when the process, and as it's laid out in Chairman Meredith's bill, and we very appreciate his sponsorship and understanding of this, those requests will come to the department, and we will get our contracted actuaries involved. Now, will I be able to give you a specific amount, that biomarker is going to, cost this much? No, it'll probably have to be in a range, and again, depending on usage. The other, ask that I would have is in our discussions, the quicker that we can get those in the department, that's not an analysis that you can do, in a week. And you all sometimes need information very quickly. So anyone that is proposing to have a mandate, if you can get those to us, late summer or, early fall, we can get the needed information that you want and in going forth. So we're prepared to do that. And again, my presence here today is just really to get this process in place, and then just to tell you how it will go forth, and we'll do whatever your direction is on whatever mandate you all pass.
And Representative Roberts, I would just say one more thing about that. In the substitute, there is language that will suspend those health mandates as long as they're triggering to frail on a go-forward basis. So any bills that pass that have them going forward, or any of the bills that we have already passed. And that was something that until kind of the last minute, we did not have the decision made on, because at that time, we wanted to talk to the sponsors of the bills that had already been passed and were being tracked. So there will be a cost for this year on biomarkers, but that ongoing cost will be suspended, as will the infertility bill as well going forward.
I have a question by Representative Rourks. No question. On the bill and a second. Is there any further discussion? There's a motion and a second on the bill. Is there any further discussion? Seeing none, Madam Secretary, please call the roll.
Representative All?
Aye.
Representative Bentley? Yes. Representative Bray?
Yes.
Representative Duval?
Yes.
Representative Frazier Gordon? Yes. Representative Gooch? Yes. Representative Justice? Representative Lewis?
Yes.
Representative Lockett?
Yes.
Representative McPherson?
Yes.
Representative Pollock?
Yes.
Representative Rorix?
Yes.
Representative Roberts?
Yes.
Representative Rudy? Representative Smith? Representative Stevenson? Chairman Meredith?
Yes.
We do have a title amendment on this bill. Oh, sorry. The bill passes with favorable expression as amended by the House Committee substitute. Same should on the House floor. There is a title amendment to the bill. We do have a motion and a second on the title amendment. All those in favor say aye. All those opposed. Title amendment to House Bill 186 is adopted.